Hey guys, so today we are doing con call analysis of PVR Inox. It is one of the biggest multiplex chain in India, and they're almost a leader. Before they used to be two separate players, and now they are one big leader in this space. So if you like this new format which I'm doing in, please do like the video and comment which video you would want me to do next on. So the question is like, why does PVR have such a high market share in re-releases, and is it profitable? And who plans what to release? So PVR and Inox basically now they have started re-releasing old movies so that the occupancy can be more during a week time. Matlab, when there are no movies, their theaters will be empty. They'll have to pay rent. Why keep it empty? Instead, let's release old classics and make people come to theater. So that is the plan. So the question was, why is PVR having such high market share in this space? Like it has around 95% market share in this case. Why? So the management says that they are experimental, and as this was a new concept, many other multiplex chains were reluctant to do it, but we did it. That's why the high this thing, and that's what during lean periods they released this to improve occupancy, and during and this has been there in the industry for a long time. Is what the management saying. Like when an actor's birthday is there, the popular movies will be re-released and things like that. So Rockstar, Love Story, all these movies were re-released in their chain. And asking, coming to the question, is it profitable? Yes, it is profitable because they don't have to pay any extra. They don't have to pay very high charges as of like similar to new releases, and their tickets are also little on the lower side. So it helps them in covering some fixed cost is what the company says. And who decides what to release is that they have an internal team which sees what movies to release, and when to release also is a matter, because when there is a week full of blockbuster movies you can't release them. So this, and then also producers approach them asking them to re-release such movies, and they give all the banners and all those print material. And releasing South Indian movies by dubbing them in Hindi is another big thing which is gaining traction. Then the someone asks, how is Q3 of this financial year looking? So the management says that October isn't that great. The only good movie or big movie was Venom. Then in November and December they have big releases like Singham, Bhool Bhulaiya 3 and Pushpa 2, and they are hoping all three will be a blockbuster, with Pushpa 2 being a mega blockbuster. And Q3 might just be the best quarter of financial year. Like last year it was Q2, this time it is Q3. Then one more person asked, BMS contract, has it ended, and how is it looking? And convenience fee fell by only 5%, but box office collection fell by 25%. Why? Because if box office collection falls by 25%, convenience also should fall by that amount. Then why did that happen? So the management says that for the contract side, they've renewed a contract for in the last year for another 4 years. So till 2027, they'll be Book My Show will be there. And the fall part, that is because Paytm ticketing business was acquired by Zomato, and there was some IT integration which had to be done for this, and PVR Inox did it for Zomato. As a one time, Zomato paid them the money. Thus and they have included this money in convenience fee for this quarter. Hence the fall has not been much. Then one person asks, rent expenses is flat year on year, although screen number of screens have increased, and also the film hire cost is also down. So how is it happening? And also re-releases, like how much film cost are you giving the producers? So on film hire terms, they say there is no change in contract. The costs were high last year. It's not low this year. It was high last year because movies did very well, and when that happens, they give some bonus to the producers and things like that. That's why it was very high last year, and compared to that, it has come down. When it comes to rental, this thing, they are negotiating with the rental properties, and hence the cost have come down. And film hire cost, which is for re-release, is lower than the what was there for new releases. Like they don't pay as much as they pay for new release, but it's little lesser. But gross margins are the same, almost the same. Like because let's say new release, they have paid 50 rupees per ticket for that movie. Like PVR pays 50 rupees, and they are selling it to customers for 200 rupees. So the margin is 150 for the company. Similarly, let's say re-release, they are doing at 200 rupees, and like let's say they're doing it at 10 rupees is what they're paying the producer, and they're selling it at 160 rupees, so the margin comes down to be 150. So the gross margin is same for both in absolute terms, and but percentage wise it's different. So yeah, re-release film hire cost is lesser than new releases. Then there was occupancy of 25.7% for this quarter. So is this the new normal occupancy which will be for the future? Is what the question is. So the management says they are not very happy with the occupancy rate. Matlab they are not satisfied. They want to increase it. That's why all these new releases and different type of content is also another thing which they are planning. So they say that a lot of producers who were very active before COVID have become inactive after COVID, and the movies that are coming out, quality is good, but quantity is not there. Like because of this, very few people are coming, and hence occupancy rate is lower. But they are saying that producers are becoming more and more confident now, and as the quantity of movie increases, their occupancy range will also increase. And they're saying that year 2025 as of now looks much better than 2024. And they said that there were no big star releases, like no they took few actors name, and none of their movies have come in this half year, and still they're doing okay, so that's a good thing. And then they said that re-releases for this year was around 80 for half year, and then they'll be doing 140 to 150 for the full year. And because of this there will be another revenue segment which will be coming, that is re-releases, and then alternate content like cricket matches or anime, all this screening, that is another crowd puller which they are planning. So because of all this, the occupancy rate, they are hoping that it will tend towards higher side. Then one person has food and beverage spend has maxed out, like it hasn't grown, it has been flat for last 2 3 4 5 quarters. So is what is matlab, how are we looking at this? Or is it maxed out? So the management says no, definitely it's not maxed out. It's very way low below than what they are targeting. Like there is so much headroom to grow. But last year, what had happened was many blockbuster Hollywood movies were released, and because of that, people who come to watch Hollywood movies are little high spending consumer, so they spent a lot, and that's why spending per head was very high last year, and because of that, this year looks less. But yeah, they are not happy, and they are definitely trying to improve it, and they are planning different format of food and beverage shows to for their stall, this thing. So they are also doing a joint venture with Devyani International, about which we'll learn more in coming slide. Then they said that they are closing some 70 screens and things like that. So I guess 25 screens or something. So how, on what basis are they doing it? So the management said that these are very old screens, like 15 to 20 years, and they're also not very highly profitable. So we are closing all such screens, and there will be 1 to 2% churn every year, and it's a continuous process. And wherever the mall is not performing, or there is no proper or the mall is dilapidated, or the screen is not performing, they are closing all those things. And another question was, in tier 2 tier 3 cities there are very few malls, and screens are not being able to open there. So how are they planning to do this? So the management said that many developers are actually coming and opening in tier 2 and tier 3 cities, and wherever they're opening, we are definitely going there and opening our screens. And also we are pushing some developers to develop malls in certain 2 to 3 cities where it's not there, and giving them guarantee that they'll open their cinemas there. And heavy lifting of capex is obviously being done by the developers. Next question was, what is the new screen guidance and capex and debt target for the company? So the company said they're planning to open 80 to 120 screens per annum for another future of like 5-10 years, and in the 15% will be franchise owned company operated, and another 35 to 50% will be asset light model, and balance would be structured lease model. So they're planning to do capex of 400 to 500 crores. In this capex, majority will be matlab not majority, but a more emphasis is being done on renovation of their high performing properties, like giving a premium experience like PVR Gold and things like that. So there more capex will be a little more on that side as well. And then the company said for debt reduction, after meeting capex requirements, their main aim is debt reduction. As of now, gross debt level, it looks high, but on a net debt level, they're manageable. Matlab they are pretty good because they have very high reserves which they have built for any contingencies. So in next couple of years, they're saying that they'll repay as well that, and it will come down significantly. So then I didn't know this that there was food delivery business of PVR Inox. Putting their food on Zomato and Swiggy. So they're facing issue as of now because it's in mall and it's in third or fourth floor. So the time Swiggy or Zomato delivery boy goes there and collects the order, it'll take him easily 10 minutes, thus delaying the order and also his earnings. So they are not expecting much from this and matlab this type of model because there is a level and after that it won't be able to cross. So they are planning to probably set up dark kitchen under the PVR Cafe brand name so that they can do better business. But this is a process which they are still monitoring, like they are not sure whether to do it or not. Then another person asks like there is events like IPL, World Cup and other things happening, and so because of this, is it like our business has become 9 to 10 month business only as of now? So the management said that before COVID, producers were very confident and they were releasing movies even during IPL and World Cup times, and movies were doing very good also. But due to COVID, after COVID, that hasn't come back yet. But once that comes back, they'll start releasing more. Then more and more people will become confident, and it's a vicious cycle. Matlab on a good side. So that's the plan. So just like pre-COVID era, they think that these things can coexist, and that is what the management thinks. Maybe they can even stream IPL matches. Who knows? Like in future. So that's what their alternate content path is. Like maybe World Cup, all these things they can screen. So yeah. The another person asks how is the joint venture with the matlab Devyani International. So the management, which is basically KFC, so they said that they are hopeful of opening a store by December with Devyani in their food court. And then PVR Cinemagic is another movie viewing experience. Has it been suspended? So the management said no, it's not suspended. When we showed the movie to our guests, so they gave us few feedbacks on how to change the interiors and other things. So they are doing that as of now. They are doing the capex on that. So once it's done, they'll screen there. Then they'll see how the audience react. And once if they're happy, then they'll open it everywhere in India, wherever the demography supports them. Like it's a bit on a premium side. So yeah. And occupancy and EBITDA, can you comment how it is? So the management said that for 25% occupancy, they had 13% EBITDA in Q2 this year. So in last year Q2, when the blockbuster, it was like many good releases were there. So they had 32% occupancy and EBITDA was almost 10% more. Like for 7% occupancy, almost 9% up in EBITDA, 22%. So their base, I feel, is like 25% is minimum occupancy. If they go below this, they'll go into loss. So if they go above this, they'll go into good profit. So depending on how the movies come, the business is very much dependent. I guess Pushpa 2 will do really good, and a few movies like Singham and Bulbul, as of now we know that they haven't done that well. So November is also dull. December will be blockbuster. So yeah, we can expect some good quarter this time. So as the management said, occupancy is not in their hands, but what is there in their hand is like cost control on fixed side. So they are doing that, and wherever rental possible negotiation, they are doing that renegotiation. So this is it. So thank you, and if you liked it, so please do share it with your friends, like the video, and subscribe to my channel. And yeah, for more and more such videos, keep waiting.